So good morning, everyone. Welcome to our discussion on payments globally, a very large, big topic to talk about. I'm very excited to introduce you to our panel. We have with us Vasant Prabhu, who's a good friend, and he's also the Vice Chairman and CFO of Visa. Visa needs very little introduction, but we're going to hear from Vasant what we've seen over the last 12 months, things that may not be so apparent to all of us on their platform, and what gets him excited about the next few years as he guides Visa. We also have with us Rene Lacerte. Rene is the founder and CEO of a very exciting enterprise software company, a business-to-business software company called Bill.com that is bringing a digital platform to their customers in their process of billing their suppliers or paying their suppliers and billing their customers. And so really bringing efficiency into that process for enterprises. And then we have Ajay Kaushal, who is the co-founder of BillDesk. BillDesk is India's largest payments platform. About 70% of all of India's online payments flow through their system one way or the other. Very large business, very large economy, growing really fast. And we'll have, so look forward to this discussion. So good morning and welcome. I think it was about exactly 12 months ago that we were all together physically for the Montgomery summit. And a week after that, the country and then the world went into lockdown. And so we've gone through 12 months of, I would say, one of the most unique times I've ever experienced in my life. Obviously, personally, socially, for the family, but also for the businesses that we are investors, operators, and founders of. So I thought it'd be very interesting to get a perspective from all three of you, maybe starting with you, Vasant, on what the last 12 months has meant for Visa and what do you see the new normal kind of looking like? It's a very big, broad question. So I'll let you choose which part of that you'd like to address.
Sure. Thanks, Sumant. It's great to be here. Yes, it is probably the most unusual time we've all been through. Just in general, sort of taking stock at sort of where we were at the end of the year. Surprisingly, the consumer globally held up pretty well through all this. It could have been the stimulus payments, a variety of other things, shifting money from one kind of spending to another. We reported our earnings at the end of January, and the fourth quarter of last year was a clean quarter comparison to the pre-pandemic quarter. And it's quite surprising if you look at, in the US, if you look at what we call payments volumes, which is all the spending on our credentials, debit or credit, it's almost like the pandemic never happened. We're on the same trajectory as we would have been had the pandemic never happened, which is quite remarkable when you think about it. Globally, we're probably 4 or 5 points below where things would have been on the pre-pandemic trend line. Under that, of course, there's some huge changes going on, as you know. We've seen a massive shift to e-commerce. So our e-commerce business has grown substantially faster than it was growing pre-pandemic. We've seen this huge shift from credit to debit, some of that driven by a whole range of factors. Even at the physical point of sale, when people go to spend in a store, when stores are open, there's a clear preference for digital payments. There's a shift away from using cash because cash is viewed as dirty and so on. So clearly, that shows up in our numbers and we've been the beneficiaries of all that. Habits are being formed, categories that people didn't often use digital payments for, like food and drug stores, things like that, have seen significant increases. Now, of course, there are soft spots, not surprising. Travel is one, obvious one, especially cross-border travel since borders are closed. Another one is entertainment, hard hit. Travel hasn't really recovered a whole lot. Restaurants were hit a lot, but they've come back pretty well. So if you happen to be a restaurateur with a good home delivery capability, then you're doing okay. So, all in all, the world moved from, being a physical world to a digital world. And we've been a critical part of facilitating all that. And I think a lot of these changes are here to stay.
Yeah, it's interesting. I was reading a stat that e-commerce is up 40% year over year. And for the first time, in the US, people are using digital wallets more than they are any physical type of payment mechanism. But I was also hearing a very interesting stat, which is the number one item that has seen the biggest increase in spend. I don't even know. I couldn't have guessed it if I hadn't heard it. Is in-home delivery of alcohol. So I guess that and then the number two is people buying firearms in the United States. So behavior patterns definitely have changed.
Yeah.
So Rene, your business offers a service to other businesses, and all the way from small and medium businesses to enterprises. And so how's your business changed, and what have you seen in the businesses that you serve, in basically their health and growth and all the other metrics that people live and die by?
Well, thanks, Sumant, and thanks for having me. Sorry that we aren't in person. It's always one of my favorite conferences, especially the evening hours with the in-and-out trucks and stuff like that. So anyways, hopefully next year we'll be able to share a burger together after the great meal that you already would have served. But anyways, what's interesting is the entire business community, I think not just the business community, but the world held their breath in March and April, right? And so we saw a lot of transaction volume really going on pause. We talked about that in our earnings call last summer. But what we did see after that is after people got through June, it did start to pick back up. So, similar to, what Vasant was sharing, is that by the end of the calendar year, we started seeing, year-over-year, growths that seemed to be consistent, maybe not exactly as strong as what Vasant has said, but definitely more, on that trajectory of that business was back to work. They were going and they were investing. We did a survey with 1,000 businesses and asking them that, how do you think about the economy right now? Where is your head? And, well over 75% said they were much more focused on growing their business than worrying about cost cutting. And so that kind of tells you the mind shift that's happened during the pandemic. We also saw that many businesses have shifted how they think about operating their business. And so we saw some initial, inbound demand. Some of our strongest customer acquisition numbers were in that first quarter of COVID, where people needed to get digital. They needed to have their transformation of their back office. And yet we've also seen that continue. And I expect, like Vasant said, that we're going to see that the world has changed. People are going to get accustomed to being able to work from anywhere. And
if you talk to most doctors, they'd say that people change their behavior only when they have a crisis. So, if you want to stop smoking or drinking, it's only when you have a heart attack you would do that. So in some ways, this crisis has led to a lot of behavior change. And as you said, Rene, even in our portfolio, we see the cloud-based value delivery has become a must-have, not a nice-to-have, because people can't operate their businesses otherwise.
Well, and the part that I think is going to continue is it becomes something that we can all, point back to and reference. So not every business shifted, right? We don't have 6 million businesses on the platform today, but everybody's going to be able to understand. So how did you manage your business in COVID?
Yeah.
Do you wish you had some more time to be able to work remotely because your kid's at a soccer game and you can't do that because you're now back to that? Right now, your kid's not at a soccer game, right? So anyways, I think that is the catalyst that will kind of continue to really help drive the digital transformation. And that's something that we're excited about.
True. Ajay, moving to India, which is, I think, not as, I would say, a topic that most people in this audience and our audience would have too much visibility into, and would be excited to learn about. What has been the trajectory? What have you seen change? How has BillDesk done in the last 12 months? I should know, I'm on your board, but I still let you answer that question.
And first of all, thank you. And sometime back, my son was asking, "What are you doing so late in the night?" So I said, it's the same conference that I go to every year, and this year there is no conference, and one has to do it sitting here. And here I am at 11:30. In India, actually, this whole payments thing, there has been a lot of change taking place over the last 2-3 years. And interestingly, our business not only held up, but it grew. And what's happening in India is, this whole payment, I think Vasant alluded to it. In India, there's a lot of shift happening towards debit kind of transactions. And that too, these transactions are originating from a platform other than that of the bank. So this entire thing around wallets and containers has actually caught on to people's fancy. And there are three or 4 platforms which are doing really well here from small value retail payments, which is one by Google, which is called Google Pay. Then there is a platform called PhonePe, and there is Paytm, and there are 2, 3 other such platforms. So there has been a humongous shift in transactions to these platforms. And given the fact that we work with most of these, what happened towards the earlier part of the pandemic was there was a sudden spurt in volumes on all these platforms. So people
small transactions, consumer
transactions. Yeah. So people wanting to recharge their phones or recharging their television sets, and those kinds of transactions actually increased significantly. And then there was a bit of a drop. And if you look at our business, I think we spent the first couple of months just trying to figure out how to operate from home, because in India the lockdown was very severe, and we just had to shut the office. Nobody could just get into the office. But we were pleasantly surprised that everybody could work from home. We never let people even take a laptop home, and we realized that people just didn't have to come to office. And even now, people haven't come back. So I think that's been a great learning that, like you said, that in such times, different capabilities show up. And I think this has been one big learning that people can work from home. In India, as far as businesses is concerned, this event also caused a lot of shift from an informal market to the formal market. And therefore, if you see
let's get that differently. You mean from unorganized, small unorganized businesses to larger, more organized, bigger platforms like the Amazons, etc. Is that what you mean?
That's happened. And even the regular businesses moved from the unorganized or the informal sector to more formal kind of thing. So India has been a mix of things. The lockdown was very severe. Markets were shut for a long time. But if you take the last couple of months, I think a lot of businesses have come back. Large businesses are still, large offices haven't opened up. But I think the key learning has been that one can work from home. The shift towards digital is, I think, is there, and it's going to continue. Payments per se has changed because a lot of transactions have gone digital.
Yeah, I mean, like we discussed, anything which is not cloud enabled or not digital is very hard to kind of engage with when you can't meet people, right? You can't go outside. So that all makes sense. Now, you made a comment, Ajay, which I'm going to ask Vasant to give us his opinion on, which is moving in more transactions moving into the world of debit, which is part of this payment gradually, as it's becoming more democratized, I think you're seeing more adoption of digital payments. Debit or non-card transactions, Vasant, seem to be the dominant growth engine behind it. When you think of Visa, and traditionally, when you think of Visa as a network, a credit network, how do you think of that? And how do you think people like Visa play into that trend?
Well, debit has always been a very large business for us. I know people associate Visa mostly with credit cards and things like that, but debit has always been, in many ways, an equal to or even a larger business than the credit side of it. Debit, as you know, has become in the pandemic sort of the gateway to digital payments, right? It's the first experience people have with digital payments tends to be with debit credentials. One of the things we did going into this, even starting 2 or 3 years ago, was to recognize that wallets are a real partner of ours. Initially, they didn't think that, but we were able to persuade all the major wallets around the world, Paytm in India, for example, LinePay, Grab, Gojek, you name them, Safaricom. There was a win-win proposition here that if they embed our credentials, and most often it's debit credentials, many of them are now regulated as payment banks, so can in fact be issuers of debit credentials. It added a huge amount of value to their customers who could now use their wallets in many, many more merchants than they could otherwise. Mm. And many of these wallets had also created their own acceptance network. So they opened up their acceptance network to our credentials, which was good for the merchants who accepted these wallets, because now more affluent people who used to have debit and credit credentials could shop there. And it also created a couple of revenue streams for them. They get the issuing revenue stream and even the acceptance revenue stream. So coming into the pandemic, we were embedded in a lot of these wallets. Mm-hmm. That has been a critical element of both, massive amounts of financial inclusion, massive amounts of habit formation around digital payments using debit credentials. yes, the wallet started out being more account to account, but as Ajay and others know, almost everywhere now, the dominant mode in which money moves is with the use of debit credentials.
Mm-hmm.
It's been very much part of the change that has happened, and there are lots of other reasons why debit is also growing.
But you're absolutely right. When you think of Visa, you don't think of that. That's why I wanted to bring that up. But do you have a point of view, Vasant, why wallets have not been so dominant here in the US as they have been in other parts of the world, especially Asia Pacific?
Yeah, primarily because there was already an infrastructure in place, and that infrastructure has gotten better and better. So, for example, one of the things we did was to allow you to tap your card. And what we found, right, starting in Australia and a few places that were the first to adopt it, was this was such a extraordinarily attractive means of paying that that was adopted by consumers very fast. Took a lot of friction out of it, right? So they even started abandoning, phone-based modes of paying and just tap their card. So I think what has happened in a lot of the developed world is that there was already a reasonable amount of financial inclusion, so people did have bank accounts. And then a lot of the friction was taken out of the transaction by new ways of paying. Square made it easy to use simple, smart devices to be an acceptor of payments, not just a maker of payments. So I think it made it less attractive to use wallets.
Less need for it, you'd say.
Less need for it, yeah.
Yeah. And so, Rene, when you think of your business, it's also really turning physical into digital, in some ways taking the paper out of the equation and making the revenue function or the cash function of the company more efficient. How do you see that? Where are we on that journey? And if you think about where you sit in this ecosystem, what's the natural parts of evolution for you? I think you're on mute, Rene.
It's really interesting that 90% of businesses still rely on paper.
Right.
Some of that's paper check, some of it's obviously the paper documents, it's the sticky notes. That's what they rely on to run their back office in the US. And that's when I think about what we need to do to get the transaction to be digital, we have to think about everything that leads up to that transaction and everything that comes after that transaction, which would be reconciliation with the accounting system as an example. And so, for us, we think about the entire experience of a transaction from beginning to end, making sure that we have ways to digitize each part of that process that a business might have. And things that we've been investing in, things like AI, so that the phone can actually take a picture of a bill and have AI do the data entry as it's just right there. The ability to enable, from a mobile experience for you to text and connect with the vendor so you can pay them how they want to get paid. And then on this digital payment capability that we've talked about, we obviously enable ACH transactions, but we've also been doing more with virtual card as well as with real-time payments, and we'll be doing the debit rails through a partnership with Stripe. So lots of opportunity to really accelerate the timing of the payment with the debit rails or the real-time payment network, and lots of opportunity for us to really give people what they need, which is their time back. That's paper actually is very slow, it's very messy, and if we can give people time, then they can actually go do something better with their time, which is going to help them grow their business. And that's what gets us motivated and excited every day. And so I think it's that end-to-end view that's so important, that we can't just think about the transaction at the end. We have to think about that as being in the middle, and there's stuff after and there's stuff before that we have to deliver.
Deeper and deeper into the workflows, both on the payment side as well as on the operating side, I guess. And Ajay, what percentage of transactions in India are today electronic?
So, if you were to say that how much of commerce or how much of businesses or retail transactions, I think it would be maybe 20-25% would be electronic. But if you were to take some of the top few, or rather the top 10, 15, 20 cities, I think the number of people transacting actually is increasing quite well, actually. And, I don't know if you know, India launched this payment method called UPI. It's been about 5 odd years.
UPI
and
stands for Unified
Payments Interface. It's actually an account-to-account payment system. And you won't believe it, it now does over 2.5 billion payments every month.
Does that kind of system exist anywhere else in the world? Is India unique in that? Or?
So, the kind of system that exists here actually is fairly unique. And the card networks like Visa, MasterCard, they did try to create a product like this earlier on, but that didn't do as well as this whole UPI thing has done well in India, the Unified Payment Interface. And interestingly, all the wallets have taken to it.
Just as of context, India is still a brand new digital economy. One can say that it's been talked about for a long time, but adoption has been relatively slow, other than for the last 12 to 24 months, where it's accelerated dramatically. So all of this is catching up to India getting the Indian population getting more digitized. Is that fair to say?
Yeah, so actually it's been happening for the last 3, 4, 5 years. And if you look at digital payments per se, it's actually been going on for the last few years. And what actually has been done is it's also become a national agenda. That's the other good part of it and the bad part of it. Because as it becomes a national agenda, the commerce out of it is gone. And with the commerce going
money
away,
is gone.
you can't make money. And with that going away, it's actually good for some people and it's very bad for some people. And
smiling over there. Vasant, we're coming back to you in a second.
So, but for people who are using these products, and given the fact that it's a national agenda, it's become a very cost-effective product to use to deliver payment services at almost no cost to payers and receivers.
So,
Ajay,
what I really wanted to touch upon was that, every country, in the world has its own set of frameworks around money. And regulation becomes an important consideration when it comes to anything to do with, holding money, transferring money, payments, etc. So Vasant, in your experience now that, you have a global footprint, you see different economies, different geographies. What are the 2 or 3 things that you've noticed are changing when it comes to governments and payments, or governments and money? And what would you guide the audience towards, paying attention to?
Well, what became very apparent during the pandemic is that countries that had robust digital payments infrastructures did very well, relatively speaking, compared to countries that didn't, especially through shutdowns, right? It was quite marked. I mean, you could see it in the numbers. Countries that didn't have them really saw a drop in commerce, quite substantial. Countries that had good digital infrastructures actually held up fairly well because the commerce just moved online. That has got the attention of every government. So if there's one thing that's common around the world is every government has realized the importance of having a robust digital payments infrastructure. Now that's components, right? You've got to have acceptance. People have to be willing to accept digital payments. You've got to have people with digital credentials that they can use. So consumers or businesses should have digital credentials that they can use to make payments. You have to have a secure network, and then you have to build a habit. So it's a lot of work to do. How governments are approaching all that, of course, is very different around the world. There's no common theme. As you heard from, Ajay, there is in certain parts of the world a desire to make payments free. I think we've been trying to work with governments to help them understand that there is a cash to cash too. I mean, cash was not costless.
Of course.
And if there isn't an economic return for all the people who have to spend the money to put in the infrastructure and to facilitate payments, you may not get the outcome you want, right? You may not get the kind of digital payments infrastructure you want. So it takes many forms. Some governments realize that. And there's been a certain amount of regulation of what it costs to make payments, and that varies across the board. It's not the same everywhere. There's certainly a lot of interest, like in India, to create domestic payment rails, strictly domestic and domestic payment schemes. That's not new. Europe did that 20 or 30 years ago. Certainly a desire to make sure that there's some focus on local processing, for example, or data localization.
Data sovereignty.
Yeah, all of that is fine. I mean, look, governments have to focus on the national interest. And we understand that. We have no issues with that. So what we try to do is to help them understand from our perspective what we've seen work in different parts of the world. And by and large, it's been fine. It's regulation has generally been, governments have tried to be thoughtful about it. But there's no one theme.
And Rene, your business, is it mostly US? Do you have a global footprint? Are you in other geographies as well?
So our customers are US based, but we do make international payments across the globe. So we do that in 130 plus countries. Suppliers that are receiving payments from US based companies. And I think, one of the things that's interesting about the US, and you kind of touched on this a little bit, is the regulation. And in part because of our country, right? We have over 5,000 financial institutions, which is a large number. If you were to go to any of these other countries that are our size or bigger, they don't have 5,000 financial institutions, and we're regulated by 50 states. So we move money in all 50 states, which means all 50 states come in and do audits of our platform on an annual basis. So it creates in some ways, yes, we are digital in this country, but it does create, I think in some ways goodness for customers, but it does create a barrier, and it creates work for, fintech companies to be able to comply with and manage.
Is Ajay, is regulation a barrier or a moat?
So India, it's a moving target here. We want it to become a we keep struggling whether is it a barrier or a moat, but it just keeps changing form and shape every 6 months, and one has to just keep up with it. I think here it's primarily because it's taken some sort of a national kind of
a nationalistic agenda for whatever reason,
whatever be the reason. And not only that, there is a bit of, I would say, some sort of think tanks who've been working to make, or rather from their point of view, come up with ideas which try to dismantle existing business models. So the earlier thing that I mentioned about UPI was one such outcome. Now there are 2-3 other things which are planned, which are similarly quite, I would say, disruptive, which is, all over the world, there are businesses coming up which are looking at how to aggregate data. So in India, there is a national, this thing which is coming up, which is called the account aggregator model, where they're going to put together a formal way for all data about all, I would say, your financial data, your insurance data, all that kind of thing coming together. Not only that, they are also looking at how to get credit in a way that it can be completely democratized. So credit availability is also going to get democratized. So now what happens is that payments, first the UPI attacked payments, then comes data which gets in some ways sorted using an account aggregator platform, and then credit. They've created a platform which gets all lenders onto one common set of rails actually. And these are actually very well defined rails, and there are reasonably smart people working to pull this together. But what this does is that something which could have been set up commercially, like Rene mentioned about having those rails, putting in place some sort of reconciliation systems. Here, a lot of those things are coming as part of the platform.
Commodities.
So that's the big shift that is happening in India, where some of these national platforms are coming in, which could have been done by commercial businesses.
Yeah. Rene, one area that, as a firm, we're very interested in, would love your point of view on, is this idea of real-time payments, especially for businesses. Would you help us think about that for the audience? What does that mean? What does that do for the business? Like, how does that become? What value does it create for a business?
Yeah, I think it's we have a product called Instant Transfer, and it's really focused on the suppliers and helping them get their cash faster. So for the business and the way things do work in the U.S., other than for the large billers, people really aren't putting late fees on if you're 3 or 4 days late, right? So if you pay by the due date and it's coming in the mail and you get it, you're not going to, businesses just kind of apply the invoice. Not true if you're paying one of the top 5,000 billers in the country. There's going to be late fees and stuff like that. So you think about our network. We have 2.5 million members in the network that pay or get paid through Bill.com electronically. All of those entities might like to have their payments happen faster. They might have a need for an instant payment because they have other bills that are coming through to them that they need to make. And so the opportunity for us in the way we see it is how do we leverage the capabilities of the debit networks, of the real-time payment network from the clearinghouse? How do we leverage that to enable suppliers to have choice? Obviously, there's some risk in that equation for us, and so there's usually a pricing element there. But I think it's an important part of how business is going to happen, is that you have to give people choice, and ultimately choice wins, and that's something we're building into the platform.
And if you think about your customers and areas around which you think that there's going to be radical, dramatic change in the next 5 to 10 years in that financial stack, the CFO stack, let's just say, what areas are you focused on? What are you most excited about there?
Yeah, I think we're really believe that this digital transformation of back office processes is got a lot of legs behind it. And the way I think about it is, there's been multiple evolutions of software development over the last 4 or 5 decades. The last one I would say would be beautiful UI on top of a database. Now we're past that. Now everybody's thinking about processes that they can automate. How do you take advantage of the fact that there's a central cloud database that has the ability to create an infinite number of user experiences off that data and connect it with obviously other databases, and that allows us to kind of really dig down deeper into the financial processes. And so we really think that there's an opportunity to kind of get rid of the mundane busy work that any business has to do. We're focused today on AP and AR, but there are definitely extensions around spend management or expense management or even HR and payroll that we see being a part of the entire financial process automation. All of that involves money movement, and we think that's a key part of our platform, and payments is a super important part of any transaction. So we have to be able to take advantage of all the capabilities that are being developed out there, whether it's real-time payments or the debit rails. But we also see opportunities with respect to credit, even within our working capital side of the business. So lots of opportunity if we keep building the scale and the platform and making it happen.
And definitely the cloud has been a massive enabler for all of that. I think this new world of artificial intelligence or automation is what's on everyone's mind. Vasant, I'm going to shift a little bit to a topic I don't quite understand. And it's cryptocurrency, or rather the frenzy around these assets. What's your point of view on what's happening over there, and where do you think things settle down?
Well, it is complicated, and in some ways it's very simple, right? So there are two kinds of things you can think about here. There's cryptocurrencies like Bitcoin, and then there's what the central banks are talking about, central bank digital currencies, which is sort of a blockchain-based currency that's backed by the central bank. And if you think about currencies, there are two sort of primary use cases. It can be a store of value, or it can be a medium of exchange. And for us, it's not a very complicated decision in the sense that if people want to hold assets in a cryptocurrency, we're more than happy to facilitate that as long as it complies with regulation and the laws. So for quite a while now, we've been partnering with Coinbase and a whole range of other partners, where if you want to hold in your wallet or in your account with Coinbase some of what you have there in a cryptocurrency, you can load that wallet using Visa credentials, and you can move that currency by going to Visa accepting merchants, and we will, working with Coinbase, enable you to buy things where that currency is effectively converted to a fiat currency to make purchases. Mm-hmm. Then the merchant is also willing to accept a cryptocurrency, you can do that too. What we're doing is going beyond that to create a whole ecosystem that can facilitate this, because you need custody, you need the equivalent of custody banks to hold cryptocurrencies. For example, Anchorage is one company that does that. There are others doing it. You need the ability for various intermediaries to check whether you have those crypto balances, etc. So we're trying to create an ecosystem. I mean, over the past couple of years, we've partnered with about 35 of the players in the space here to create this entire ecosystem. Fundamentally, we can facilitate your ability to either hold cryptocurrencies in an account or to buy and sell things with cryptocurrencies. So for us, it's really a simple thing, which is if consumers or people in general want to hold assets in cryptocurrencies, like they might want to hold assets in dollars or pounds, it's fine. We can help them do that as long as it complies with all the laws. If there are people who are willing to accept cryptocurrencies for buying and selling things, we can do that too. We facilitate 200 currencies today in the Visa network. Adding cryptocurrencies is like adding another currency.
Yeah, for you, I get that. I mean, what I was kind of confused by is why are people like Tesla and others buying Bitcoin as
I can't get
on
into
their balance sheet,
their logic for why they hold cash. But what Tesla has said is they will accept cryptocurrency, right, as payment.
Yeah.
And once you do that, then effectively you're in the business of accepting and paying for things in cryptocurrency. Now, whether they're holding it on their balance sheet as a speculation, I don't know. Now, that's not something we would do as a company. It's how you want to invest the assets you have or the cash you have.
Yeah, AAA bonds.
To each his own,
Yeah, to each his own. It's totally fine. This is another place where regulation has a lot to add or subtract from. And if you go to India, Ajay, if I'm not mistaken, cryptocurrency is just not allowed, right? It's against regulation.
Yeah, it's very simple, not allowed.
Not allowed. And so all these exchanges have been shut. Now, if you go to China, there's a government-sponsored program in place. And so it's one of those things that personally I'm quite intrigued by, but confused by, is to see where this thing will end up being. So you can't be an expert in everything. Ajay, just, one of the things, reason to have you on this panel was to give our audience a little insight into what's going on actually in India and internet and stuff. And because a lot of people hear about China. China's been been a great place for people to invest in, lots of action, big companies like Alibaba and others come out of it. What's the on-the-ground story for India and internet adoption?
On-the-ground story actually is very good. I think Vasant mentioned in the beginning, I think the entire the delivery business is doing really well. The e-commerce business has picked up. A lot of businesses which were not digital have gone digital. And some people make a comment that whatever change would have taken 5 years has happened in these 6 to 9 months. People have started paying for all these services. So I'm sure you're aware that earlier on there was nobody used to pay for all these delivery kind of services. Now everything is charged and people are paying.
You mean home delivery?
Home delivery, yeah. And so that's been a very big change with the fact that people have realized that there is a value for delivery at home. And a lot of small businesses, mom and pop, small stores, they have all gone digital. People have set up their, I would say, web presence, or they're coming onto the app. Even things like Facebook and WhatsApp being used for commerce has also picked up. So there has been actually a fundamental shift that has taken place. People have realized that it's important to be available on the digital platforms. The only thing that actually worked during this entire period were the digital platforms, because the markets were shut. Though there were some restrictions on delivery also in India at that time, but most of the digital guys did quite well. And we saw, I would say, a reasonably large increase in the usage of all these platforms. And I think this entire, I would say, whatever would have taken us 4 or 5 years to start using these services, that's happened in these 8-9 months. I think that's been the biggest.
Well, for sure. If you look at just the US, Ajay, cash usage is down 40% year over year, and e-commerce is up almost 20%. The thing is going to double by 2024. So, there's definitely a shift in how people are reacting to things.
Yeah.
But I think one of the things that is interesting about countries like India is that it's a massive market, which is still on its sort of first generation of digitization. It's just getting to a place where people are adopting these technologies. Vasant, do you see other markets in the world which resemble India, or you have other markets that you think have the same kind of potential that you guys are focused on? Or rather,
certainly, there's India clearly gets a lot of attention given its size, and there's definitely a lot going on there. But there's extraordinary amounts of similar kinds of change happening all across Africa. Africa is something you should watch for sure. There's a lot of innovation going on in Africa, and it's a different kind of innovation than India in a way. There's a lot more going on that's mobile first. It started out with the telcos and now, becoming more broader. Latin America, Brazil has always been a pioneer, but a lot of the rest of Latin America is quickly catching up. Indonesia, I would say in the area of payments, there's extraordinary amounts of innovation going on almost everywhere, and it's different. It's not the same. There are different models going into different places. And at some point, there's a lot of opportunity to cross-pollinate also. So it's very exciting what's going on.
I'm going to shift a little bit, Rene. Just you're the only enterprise software company on this panel. Not a huge number of people, just another three of us. One of the things we've noticed in our portfolio is that selling motion has changed. As as you sell your customers, you're doing more and more this kind of conversation versus in person, obviously. How have you managed your business through this? And what have you seen as change that you think is going to last versus is transitionary?
Yeah, so for us, our platform serves businesses of all sizes. And so, the dominant form of, our distribution really comes from inbound, on the direct side, comes from inbound digital media campaigns that we launch, which leads to, a salesperson having a conversation, a Zoom call, with a prospect, but not necessarily, right? They can get up and running on their own, and they do. If you look at our accountants, so we have kind of three core channels that we distribute through. So we have our direct. It is, this in-process sales, if you will, digital sales that's online. Nothing's really changed for us. We're just doing more of it. When we look at the accountants use our platform to put one or two clients on. Over time, they put more. We're seeing more accounting firms, in this, era, if you will, saying, you know what, I'm just going to go for it. Let's put as many as we can on. What's the process to shift? So the sales process sometimes becomes more of an onboarding process. Mm-hmm. How do I understand, how I'm going to implement, multiple clients at once, if not tens or whatnot. And in our financial institution partners, they're the ones that when we sell through them, it's a white label solution. They now are shifting their focus, saying from a marketing, a messaging, and a sales perspective, they want to lead with this. They really have more conviction around the opportunity to kind of get rid of the back office mess so that they can actually be, more digitally native for their customers. And so we've seen changes, as a result, more in our channel partners, our direct effort, it's been more just doing more of what we were doing before.
The companies that can actually sell online have seen their businesses do better than the plan. And the companies that had requirements for physical integrations or a long lead time to seeing value they've had to sort of been delayed. Their businesses have suffered. Ajay, how do you sell in this pandemic? Like how has it been with your customers and the customer engagement for your company with its customers?
So, the demand, like I think Rene also mentioned, the demand really went up. And the demand from the small to medium sector of businesses was quite high. And a lot of them, they try to come to some of these platforms like Shopify and others. So it's not as difficult to engage with them. But if you go to a reasonably, I would say, sized business, then you do need to engage with them because they have their accounting system, they have their billing systems. So one needs to connect into those because they need to reconcile. But what we saw during this period was, I think, frenetic activity across the board. The large guys wanted to do it. And again, in India, given the government took another step, they said all businesses above a certain size have to offer a digital way to collect. They just made it a mandate. And there was a fine for companies and businesses if they didn't enable digital payments.
Interesting.
So a large number of businesses just had to do it.
So basically, the businesses that were still on the paper route had no choice but to transform into accepting digital as part of their business process.
Yeah, they had to just accept it. And
by law. That's funny. That could help your business, Rene. I think if something like that happens.
We've definitely seen more interest and more demand as a result of the pandemic.
So Vasant, what, as we sort of think about, there's many areas that we can focus on when it comes to payments, APIs, data, all of that stuff, which, over time gets solved and you either create a business or it becomes commoditized really quickly. If you were to think about your top 2 or 3 initiatives at Visa, where you're putting your energy and focus, the most exciting parts of which you're, sort of thinking about for the next 5 to 10 years, what would those be?
So about 4 or 5 years ago, we drastically changed the capabilities of our network. For about 60 years of our history, we used to do one thing. We used to enable payments to merchants. Money would come out of a credit card or a bank account to pay a merchant, flowed one way. Now money flows both ways in our network and can flow from node to node. So fundamentally, we've gone from being an enabler of consumer payments to being able to digitize money flows of all varieties. So we can facilitate P2P, person to person, governments to consumer, which a lot of governments, including the US, used in this pandemic. B2C, meaning businesses paying individuals, like the whole DoorDash, gig economy world, and of course, various forms of B2B. So sort of what we see is a 10x opportunity ahead of us. There's about 18 trillion in cash to digitize in the world of consumer payments. As Rene and Ajay know, there's about 180 trillion of cash to digitize when it comes to the world of money flows. When you pull in how much money is moving around the economy as cash or checks from person to person or business to business, and so on. So what we've been doing is we've gone past sort of thinking of ourselves as a network of Visa rails to being a network of networks. Our job is to get your money wherever it needs to go, from any node to any node. We're revolutionizing remittances, for example, which we never used to play in before. We're doing large amounts we can revolutionize the whole payroll business. Payroll can be on demand, as we've talked about companies like Earnin, and there's a whole range of other companies that are revolutionizing payroll. So for us, the whole arena is drastically changing, creating some massive growth opportunities. And the nature of who our customer is also changing, with the world of fintechs and all the use cases they're enabling and so on. So it's an extraordinary time. And we are, very focused on what we call our new flows business and a range of other businesses that go with it, like our value-added services, as we call them. But I can go on and on, so I'll stop right there.
No, it's interesting, at the size and scale of what Visa is, to see that kind of growth is staggering. But I think the world is moving into this world of digital. So it's part of that, it's seeing part of that come through its picture. Ajay, what's on your mind next 2 or 3 years?
So I think one of our big agenda is going to be around affordability. I think we are looking to make available lenders through our platform. I think that's going to be a big agenda for us. The second big agenda, I think, is Vasant alluded to it a little bit, but I think we are looking to rewire the supply side of payments, because I think the demand side has been rewired and many things have happened. Rene mentioned about the great UI and all those things. But I think the demand side, as to where the lenders are or where the banks are, I think a lot of new things can be done there. So one of our agenda items for the next 1 or 2 years is to find a way to rewire some of this in a way that it can be more efficient, better, simpler, and more democratized, where people can get in and get out, or rather get in easily, which is the banks. So the opportunity otherwise for payments is anyway very large. Like Vasant mentioned, in any case, it's well known. But for us to, from an India perspective, credit is high on the agenda, because that's the place where I think we can, I would say, benefit, not only enabling credit, but maybe also start exploring taking some credit positions along with some partners. That's one line of thinking. The second one is, how can we do some bit of rewiring on the supply side, which is how can we connect the banks in a more efficient manner so that the delivery can become more efficient.
So we are very hopeful that you'll be successful, because both Vasant and I are shareholders of the company. So with that, Rene, for our audience, what is it about Bill.com that you'd like them to know that they may not already know? I think you're on mute again.
we're building a platform that is, meant to be built for all businesses, right? And it's really requires a lot of simplicity, and so we continue to reinvent ourselves and to make sure that we're adding more and more simplicity as we scale into more and more businesses. And so that means that we're willing to take what we've built, whether it's our payment capabilities or integration with the accounting software providers, or even the front end UI that we have, and extend that into other processes. So processes, like we talked about with expense management or spend management or HR, payroll, or working capital. These are all things that involve the end-to-end transaction life cycle that we have automated, and we'll continue to focus on that simplicity. So I think the main focus for us over the next few years will be to continue to extend the platform, to add more payment capabilities like we've been doing, and to really deliver on a user experience that is meant for the millions of businesses in the U.S., not just a small number.
Perfect. Well, listen, I think this is a topic that we could go on and on and on, because there's so many different parts of this world. Payments is part of so many different, in pretty much every business has some sort of payment attached to it. So every human being, I think, is engaged with some form of payments or the other. But I really wanted to thank the three of you for taking the time to spend a little time with us, telling us about the world of payments and your businesses. And so with that, I think, thank you.
Thank you.
Thank you.
Thank you so much.
Thank you.
Take care.
Bye.